Joining me now is Rich Bernstein, the CEO and Chief Investment Officer at Richard Bernstein Advisors. Rich, how can this be the dot-com crash when now, what is Amazon spending? $100 billion? It's like $300 billion. I know that the other side of that may look bad, but aren't we still on the upward climb?
So Kelly, remember, the market's going to anticipate a lot of this. The market's not going to wait. And, you know, in the tech bubble, you had extensive amounts of CapEx as well. You had CapEx on storage. You had CapEx on fiber optics. There was a lot of money being spent, not as much as being spent now. This is even more. But, you know, effectively, what people forget is that there's inventory cycles in every single industry. And what you're seeing is a buildup of an inventory cycle in tech. Everybody's spending like fiends right now, but there's really not the demand, and everybody's scared to be caught behind the 8 ball and be slow. So what happens is they build up capacity, and then it's not needed, and then you'll get a down cycle, and that's the old inventory cycle, and tech isn't immune to it.
And I might. Look, I want to believe that narrative because I get it hard. I like to be a value person and think, you know, but I have never used all of these AI models, whatever we're calling them, more than I'm using them now. I use them all the time for everything, and I'm just one little consumer. So I can't imagine what the usage must be like in the enterprise. And, you know, I have people sending us stuff all the time, like researchers in the world of retail who are doing incredible things with AI in these data sets. And I just think, you know, multiply this times millions and millions of people, and I can understand the CapEx and I can see the demand.
Yeah. So Kelly, you've hit on a very important point, and that is that people have a very tough time differentiating between an economic story and an investment story. The economic story for AI, will AI change the economy? Of course it will. I mean, who would argue otherwise? That's silly. Of course it's going to change the economy. But it's important to remember that technology always changes the economy. Right? The internet changed the economy meaningfully. Look what I'm doing right now with you. We couldn't do this 25 years ago. Right? The automobile changed the economy. My personal favorite, the light bulb. Massive productivity enhancing technology because it turned the economy into a 24-hour economy. Air conditioning, right? I mean, this is nothing new. But the investment story, right? Will AI be a good investment team? For long-term investment stories, it's always a function of the supply and demand of capital. If people are throwing money at an investment, the long-term returns will always be lower. You want to look for situations where you can be the one banker in a town with 1,000 borrowers. It's hard to argue that anything related to AI right now is starved for capital.
All right, so you're starting to convince me. So then I sit here and I go, well, okay. But every time I've heard the case to walk away from these companies, it's been the wrong case to be made. Now, okay, you can say Microsoft's gone nowhere for a year, fine. But where do you go? And I don't just mean healthcare's up for a month, and I don't just mean, I guess, financials. I don't know how excited I'm supposed to be about them, you know, kind of being great stewards of capital at these valuations. Where do you really go and feel comfortable that you're going to compound that return over time?
Right. So Kelly, a couple of things embedded in your question there. Number one is I wish that people would admit that the primary driver of the Magnificent Seven was liquidity. It was not fundamentals. There were plenty of companies that were growing. We published a thing, I think I discussed with you many months ago, that there were like 70 or 75 companies in the S&P 500 growing earnings 25% or more. Nobody cared. This is a very liquidity-driven, speculative market that we've seen. Well, if it is liquidity-driven and liquidity dries up, that means that the story starts changing. What's happening? Your previous segment on the A block here, you're talking about the Fed maybe reversing course. There you go. That's the liquidity starting to dry up as the Fed considers reversing course. So it's natural that you would see this liquidity coincident with this discussion, or the liquidity coming out and the Mag 7 suffering at the same time people are worried about the Fed tightening.